Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Today's the 14th of August. Welcome to the forecast for Trade Week strategy call. It is my hope each week at approximately 10 a.m. Pacific time on Tuesdays and Saturdays to bring you hopefully any problems building in the markets and or an overview of what's going on with global macroeconomic events that could affect the trades that one is taking. Also get you a feel for where we are as far as the charts. Okay, so occasionally, and the Q&A window is open, so is the chat window. If you have any questions or you want to present something to the greater good of the participants, of which looks like we got a pretty decent crowd this weekend. So we've had a lot of turnout to different events, which is great. So seeing the momentum take off from our Ride the Wave event that was a good time in Orlando. So chat window, Q&A for questions, or if you guys want me to see me any particular currencies. I'm going to start off with FinViz, and hopefully that's what you're seeing on the screen. Hopefully you can hear me okay. This is just the markets as a whole. Both the U.S. markets, Dow, S&P 500, NASDAQ, Japanese market, European markets is represented by top 50 and DAX, obviously. No surprise, with the exception of the Japanese markets, we've been near highs and everything, albeit last week was some of the lower volumes we've seen on the S&P over many years. Yesterday marked, I should say last week marked the low in that area. No surprise, it is a holiday. It's the last final 2 weeks for many of the biggest institutional traders. Will be getting back to their desks and operations. I would imagine will resume damn near full capacity for many of the firms in New York. So with that being said, note some of the pullbacks in the different energies. Did note the pullbacks in a lot of the precious metals. See from gold, silver here, all the way down to platinum. It's been sort of just a broad move. Gold's had a lot of sell-offs, a lot related to inflation, of which we have some news coming next week in that regards. So do keep that in mind. I think it's interesting, though, that when you look at a lot of commodities, not necessarily like the foretell what's going on in currency land, but I think it's always important for every investor, regardless of whether you invest in stocks, real estate, art, you trade in different exchanges or Forex, the futures markets. You always pay attention to what's going on globally in terms of just the biggest macroeconomic factors. Right now, some of the ones that are concerning the marketplace the most, but yet sort of haven't shaken themselves through the marketplace, is effect and the concern surrounding inflation. So if you look at prices from certain food-based items, some are at lows, some are at all-time highs, like oats, right? And look at the price of cotton. It's certainly going to affect textiles. Coffee went way up, came back down. Lumber, surprisingly, it's been the polar antithesis, opposite of all of these markets. And we're looking at just daily charts here. But if you take a look at weeklies on a lot of these, it will show lots of different stuff showing up. I think that the surprise, though, is that there has been big sell-offs in core commodities, especially related to building, but yet we're seeing inflation in other areas. How do you sort of put that together, and why should you even bother looking at that, Steve, is really just because it's going to affect at some point, if it continues its ugly head. The Fed has no choice, and it's European Central Bank, and Bank of China, Bank of Canada, Bank of the UK, all the big central banks out there in Australia. they have no choice but to raise interest rates if inflation really starts to get ugly. What does that mean? That means currencies are going to go bananas if we start raising insurance rates. If we start raising rates for, um, everything from prices of the costs of mortgages to just the general yield. Notice that when you're looking at either the 10, 30-year or the 5-year note in the US markets here, we have, had some pretty big sell-offs in price, and now we're sort of, I don't know, beginning to levitate back up into some of those areas in terms of price. It's just keeping a lot of the yields really low globally, which is making the costs to do almost everything from a credit-wise version very affordable. So it's been interesting to say the least. So just taking a look at the currency, which is these bottom two rows right here, you can see the correlations from a weekly chart. I'm going to drop this back to daily on our bottom analysis here. So just the currency of the dollar has been strong over the course of, June essentially to now. We've lifted back up towards the high. This whole 93 area has served the purpose of being a good resistance point. Thus, everything else has gone down, right? So generally, maybe with the exception of the yen here, drops in the pound, Canadian dollar, Swiss, Aussie, NTD, everything has come down as the dollar has lifted back up. So now the question really is the same question we've been asking for the last 6 months. Are we really going to see the dollar go above 93? I don't expect in the next 2 weeks. I know that's necessarily not a good long-term answer, but it's typically slower. Volumes are typically lower. So I don't expect that to happen in the next 2 weeks. Could be wrong. But for now, let all these systems that bring you trades or your ability manually via Arrow to bring you trades, and don't hamper that, but do understand where the charts lie. That if anything starts to explode out from these areas, you could say you saw it here first. Get a lot of questions on this. Let me post this to everybody in the chat room here. This is a master link to FinViz. There you go. Double link. It's your bonus plan day. So again, you don't want to learn or read too much into this. I think this is a good broad dashboard that I bring up to almost everybody. I show most clients this because I think it's a great place to just look at everything's relation to each other, right? It's a good way to see breaks and trends. It's a good way to see where things that have been uncorrelated or have an inverse correlation, meaning they do opposite stuff, start to come together and have a correlated move, right? I don't know that I'd read too much into the, anything that has to do with food, cattle, rice, what they call the different wheats. But I would pay attention to what's going on with the price of energy, whether it be nat gases. If you start to see something that breaks from another one, at least from a daily chart, you can even look at these from more broadly in a weekly chart perspective. A lot of times it could foretell moves in currency markets. So with that being said, let's take a look at the calendar. So next week is the 15th through the 21st. It'll be the third full week in August. Do note that in the US, and remember, these times are always different. So look at Forex Factory for yourself. Don't pay as much attention to the times as you see here. Use your own time zone. Okay, so core retail sales, okay, that's coming up. Fed Chair Powell speaks on Tuesday. So probably wouldn't be trading in front of or around this event by a couple of hours. Same can be said if you're trading anything that has to do with NZD on Tuesday. This is a little later in the day, obviously. but we've got a lot of RBZ stuff coming out. Press conference. Same thing with a Wednesday, FOMC minutes. This is typically the notes that are released from previous meetings. It's on Wednesday, FOMC meetings, unemployment change, the unemployment rate, and this is both Aussie-based events. Other than that, though, Monday, Thursday, Friday, it's really nothing going on. And this is by design, guys. Most of these central banks and or meetings that are had are very rarely in the summer, where many of these bodies of governmental whatever are off, including all the idiots in Washington will be gone for the next couple of weeks. The question has not been asked, and I think probably should, is do we expect anything out of this, what has turned out to be a completely mess of a infrastructure bill that will affect markets? I don't see anything in it. Doesn't mean there won't be something hanging off it. There's always inevitably ornaments that get stuck on all these bills that could have something to do with movements in the markets. I think the key thing really, as far as taxation in general, should be kept an eye on, although I would always find it surprising that any bill coming out with changes to tax structure from the standpoint of corporate earnings and or capital gains would have dramatic impact upon markets if in fact they were real and the marketplace felt that they were going to come to fruition and be signed. So far, we're not seeing that. So all of the shtick that's being brought out by all this crazy media, I think that it's just designed to get viewership. Let your hearts not be troubled in this area. You know, if I'm out there genuinely concerned about changes in tax rates from any perspective, that's when I would be concerned if I were you guys. So far, it's just hearsay at this point for the question I just got on that. All right, so let's take a look at the charts. Skip past markets, because we've already talked about that in terms of equities. Looking at the dollar. Actually before I get in, I want to play you one thing. So if you guys don't know who Jeremy Grantham is, he is one of my idols. He is one of the smartest people on this planet. He may not be the best looking guy, but who cares? He is wicked smart. Grantham's interest rate observer. For those that have any further, Jeremy is lauded by some of the smartest money on the planet. He is followed and deeply watched by many in the hedge fund space. This is his interview last week. Let me see if I can share this here. Just a quick one.
We live to a degree in a hall of mirrors constructed by the central banks. We live in a time of fictitious wealth, as Lord Liverpool put it in the year 1818. You weren't there, Ed, but I was around it. I was just a trainee. We live to a degree in a hall of mirrors constructed by the central banks. We live in a time of fictitious wealth, as Lord Liverpool put it in the year 1818. You weren't there, Ed, but I was around it. I was just a trainee.
So essentially, what only seems real, but we're in a hall of mirrors, and I'm not really going to build on that other than to say that he thinks a lot about what central banks are doing right now are really going to be quite ugly going forward in terms of kicking the can down the road. I don't think that surprises anybody. But the fact that he's become much more vocal about this, and if you do have the wherewithal, I would highly suggest a subscription to the Interest Rate Observer. It is not cheap. It is an institutional quality piece. But it's good to Always be following what's going on in essentially he has really nothing to do with the equity markets or central banks. He's always been an independent guy from the standpoint of a researcher. So that is a little comment from Jeremy before we get started here. Let's take a look at the DXY. So we've been talking a lot about this, and our 93 area continues to be resistance. So if this continues to hold, I see lower lows, possibly breaking down the lowest low, which is the 89.30-ish area, has been a formidable zone to crash through so far. Doesn't mean we can't break down through it. For the video link, if I can find that again. Tell you what, stay tuned on that. I'll see if I can put that out to link to at least the larger interview rather than just a couple of snippets, which is just really only 16 seconds. It's not going to teach you much. All right, so here's DXY, and then on the opposite side of this, support down here at the 117 area on Euro US dollar. I think that along with these two zones down here, this is the edge of the cliff. 116.36-ish, and then ultimately the last and final bastion of price level, which is this 116.20-ish area. We're below that, all bets are off. Dollar's going to lift. I don't have any areas because we're looking to probably zipper down to a much larger level, or zipper up, I should say, if we're breaking through in the dollar. I don't expect it to happen in the next 2 weeks. Doesn't mean it can't, but for so far, it's been very quiet. Same thing with the pound. I've shown this chart a ton. This upper zone's really the key. CAD, beginning to sound like a broken record with me in this, but you can see we've been tightening up and coiling for a potential breakout. Dollar JPY, one of the bigger moves we've seen over the course of the last, took place last week. But we're still in a tight zone that we're balancing between these highs and lows. Let's see. Question I just got an AUDNZD. Let's take a look. I think I've shown that in a while. I don't think I have it on the chart, do I? There's a chart of AUDNZD. We're looking strictly on the daily down here. The support level at this whole 1042-ish area is sort of the edge of the cliff. We get down underneath there. Obviously the strength of the New Zealand dollar is shaping up solid in terms of its relation to the Australian dollar. If we get below this, all bets are off. We really have to move to a weekly chart to see where we would set. And the problem with this weekly chart is it's giving me this is the bottom of the entire move right here, almost par between these two currencies. So that's essentially where the big support is from a weekly perspective. But still here, 1.050 area, short-term support. Drop back to the daily. I mean, nothing too phantasmical on this one. So I just, it's tough to know where this is going to go. I put very little stock in my ability to analyze this currency. It's why I do not show it much. I know a lot of our softwares out there don't trade it, nor do a lot of folks manually trade it. I don't plan on it. I don't think I ever will, just because it's hard to be able to chart what's going on with the relationship between these two, even though they're just two continents very close to each other. There's just a lot of dojis forming here, but not a lot coming out from it after this fairly protracted move lower. And really, from a daily perspective, there's no support down here other than just the lowest price points, which are these two fractals down here I showed. So you have to drop to a weekly chart to take a closer look at it. I don't see, just based upon this, I don't really see any particular reason, at least in relation to the New Zealand dollar, why the Australian dollar is going to all of a sudden show some strength. I just don't see it. I see continued weakness. And if you go back to just the basic chart, I always like to start with the majors and work up, right? Look at just the weakness in general in relation to Aussie US dollar, right? Then you want to usually look to the Canadian dollar next, right? So it's been weak in relation to all of these currencies. I don't see any reason why the weakness won't continue in its relations to others. I mean, things been in a confirmed downtrend as a trend line down since the 22nd area of February this year. All right, so GBP CAD, here's the NEO currency. Look at that daily. So this is the big support line here, 1.70, 30-ish area. On the high side, 1.74, 50-ish area. It's been quite erratic, but it is sticking within its broader ranges. There's the dollar Swiss for the question I just got. Support and resistance inside these areas. It's 92, 10-ish area. And on the bottom, it's like 90.49. Ultimately, the big support area, this 89.50-ish area. Gold for the spot question I got here. Little more clarity in gold land. Just keep in mind the big proponents of gold, those guys out there that are supporting it, do see some sort of inflation-based hit, if you will, like we've already seen it. So far, this whole 1680-ish area per ounce has been big support. Anytime we've had a move down into this area recently over the last 6 months, we've rallied right out of it. So that tells me so far, any moves down to this area from a longer term perspective, one wishes to trade into this, it's a pretty solid area to which to potentially get a bounce from. On the high side, going to move to the weekly chart to get a better feel for where we are. Short-term support, which I just talked about, the resistance on the high sides, right around 1900 an ounce. The big resistance, this whole 1967 area. And then obviously, ultimately, the all-time highs, just under 2100. So many feel the gold, although it really hasn't shown. I mean, it really has made a lot look stupid over the last 6 months because it hasn't done what the vast majority of these gold bulls have said. That's got to tell you something. And when you have a large group of prognosticators, right? Many of these folks are idiots. There are some smart people in this group, but the vast majority of them out there, especially all those stupid commercials on TV, they've been all wrong, at least in the short term, right? So if you're holding for the longer term, you don't really care about the short term, right? And you still only see stuff like this, right? The longer term bulls only see this move, right? They see this whole move out of the early 2000s. But since then, it's been a sordid past for gold in terms of being able to make any money long term wise. It probably seems to many that this is never going to break out. Should be right. Got a lot of overhead supply to get past, and not necessarily as much to see there from the standpoint of volume. You switch over to the main ETF that trades, which is the GLD. And you begin to see in this entire move up here, most of the support's right down here, much lower from a volume perspective. If we move into just the current we're at support from a volume perspective right here. Even argue a little closer on data. As long as metrics of inflation don't continue to surprise the marketplace, gold should move up. Problem is any advances in gold, so let me switch back to the daily, any advances in it are wiped out as soon as anything shows up inflation wise. So here's the whole last year in gold, right? It hasn't done anything. Unless you were short at the top, you're somebody that got really long down here and you've just been in it for a trade. It's been a difficult or to figure out. Let's take a look at coinage. So we, I don't know, it seems to me, I don't pay a lot of attention to social media from a just a social standpoint. I pay more attention to research that comes out in areas. I try not to pay attention to shills. Those are a various and sundry group of individuals that in many cases have made a bunch of money in crypto and they think they are God's gift to analysis and you should follow them. But many of those did not tell you, for those buying in at the highs up here during the mania, that things could go lower, right? So if you are following somebody that warned you and got you out once we broke this head and shoulders, as I talked a lot about, and or wanted to see a bottoming pattern play out, which I still don't think this has, hats off to them. You should follow that particular furu. Otherwise, I think that at some point, once we get back and sort of back in our seats, if you will, in the fall, I think it's really going to be a standoff in this showing up, because a lot of this has all just been lifts on lighter volume. We'll have to see where the real ground stands once all the big institutional players are back in action. But for now, you have those touting its potential move back ups to the high, whereas from the standpoint of an investor, there's changes coming to the taxation and reporting requirements, at least for the American based brokerages that deal in crypto, like a Coinbase. So I'd be but the support right here at the whole 29,800 areas is real for now. This is an orange line. This typically tells you it's stronger support. And you'll have those arguing that we've bounced off it a bunch of times. It is now rock solid support. It would be rock solid if we continued to see huge volume lifts every time this area was hit, like real big. Like I'm talking bars that look like this, right? That would put a lot more structure in understanding whether we bottomed or not. Personally, if I was an owner up here and, I sort of waded through the craziness of losing half my investment and now we're got some of it back, I'd be looking to take some off the table here, not loading the boat expecting this. Again, my analysis of this could be dead wrong, and it could go back up to the highs. I'm just telling you what I see as far as my read in the tea leaves. I expect this to crash through at some point so we can truly see what kind of legs we have to stand on for this much lower. In this whole zone of right around 20. All right, what else? Ethereum, same thing. Back to the daily on this. Not a lot of sort of targets I have here, very little. I think that's pretty much everything I wanted to address. See if I can find that Grantham interview and post that in my Telegram channel. Do keep in mind, if you're haven't been too plugged into what's going on corporate, we're in a process of going to be switching over to an entirely new platform. So YouTube, Vimeo, Zoom, Telegram, they're all going to go away, and it's all going to be into one brand new platform that completely integrates video, Twitch, all kinds of different stuff. Should be killer. And it also is going to force subscribers, which I've been complaining about for a year. The once somebody signs up, they should automatically be subscribed to the different channels inside our new platform for the developers, and or my calls, corporate, or any of the other stuff they want to be signed up for. So the new platform is going to do all of that, which should drive a much, much greater size herd to all of these calls, because there's still people in different countries that don't know much about what I do. So I think it'll be a way to sort of circumnavigate, sort of getting the word out, and it'll automatically be forced on the platform, which I think is killer. So it's just going to allow everybody to be much more plugged in my opinion, if you've been paying attention to what's going on the platform. So with that being said, I wish everybody a great week. I think volatility will be back soon, folks, but just understand we're going to have to let a few things play out. There was a lot of concern in the last couple of weeks by different individuals that I follow about just weird things going on globally. But, honestly, I don't really think anybody should be under any grand illusions. We've had a very, very different period of time. And one that's unprecedented and nothing to compare to over the last 5 or 6 decades. At some point that's all going to shake out. And volatility will be back. And in some cases, I think there's going to be massive volatility. I don't know when. I can't tell you how long it's going to last. I do know that it will be back. And I'll have a lot more to say about that. And really trying to keep you guys safe through that volatility, which is in some cases going to be tremendous. So I'll wish everybody a good week. Be kind to each other, spread the word. May the trades be with you.